Welcome to Interactive Webinars for Small and Home-Based Businesses. I'm Karen Reddy-Penning of Monarch Empowerment Coaching, and today we're going to be talking about preparing for tax time. We'll be presenting in collaboration with Renee of EBC Services Incorporated and Matthew Obulafor of APED Canada Incorporated. Today Renee is going to talk to us on how to prepare for our taxes.
Thank you, Karen. Getting ready for tax time. As a small business owner, you will need to report your income, expenses, any taxes that you have collected or paid, both federal and provincial, that you have charged through your business activities. What are the steps to ensure you can be ready to do your annual tax returns? This webinar is designed to offer helpful tips and guidelines to be ready for tax time. As a small business owner, you are responsible to maintain accurate records of all aspects of your business. You will be the one who will be reporting to Revenue Canada what you've earned, what your expenses have been. If you rent office space, if you have staff, if you're a small business owner, if you're an entrepreneur, if you're an independent agent, you have to report your income, any taxes collected from sales, and taxes paid on allowable expenses. The word allowable is very important to a small business owner. Understanding what Revenue Canada will accept in terms of allowable expenses for your particular business is very important to understand at the very beginning of your business so that you keep track of all the appropriate receipts and don't incur expenses that will not be allowed for your business. One of the key items that is so important to stress with new business owners is become informed about your business. Do you need to have a license to collect taxes? And who is going to give you that license, provincially or federally? Get in touch with your provincial government to find out what's required for your business to do. If you have an HST license federally, you need to report all of that income accurately. Be informed. There are some tremendous sources of information out there. In your local community, there will be a Chamber of Commerce. There will be small business sites. There will be tax seminars. There will be small business workshops you can attend. It's really important to find those resources and avail yourself of them. Doing taxes annually can be very complicated. The more you know, the more effectively you can be prepared to do your taxes. It's really good to meet with an accountant or a tax expert at the beginning of your business so that you really understand all the ramifications of the activities you're going to be engaged in your business, so that you know what receipts to keep, what are the allowable expenses, how you're going to manage your sales, collect your taxes, remit your taxes. All of these things are very important, and it helps to seek the advice of an expert to be certain before you begin. So here we have students in a variety of different seminar situations learning. As I talked about earlier, there are places like the Chamber of Commerce. Banks will often have small business courses. And if you are working with Manpower Canada or with unemployment or EI, I guess it's called now, what will happen is that they have a variety of sources for you to learn how to manage your business, how to keep your documentation, how to be prepared for tax time. Read as much as you can. Go to the small business centers for advice. Attend any webinars, any seminars that you can. And the library is a tremendous source. They may have videos you can borrow. They may have workshops. They may have seminars. You're a small business owner starting out and you've never owned a small business, but you've always worked for someone else. It's important to know that you are responsible for all the taxes you collect and pay, and you have to remit your taxes appropriately. So be informed. It's the best skill you can gain beginning your business, getting prepared for tax time. What's your business model? Are you a sole proprietor? Are you in a partnership? Are you a corporation? Are you a limited company? Are you a professional, such as a doctor? Are you a business consultant? Are you a franchisee, agent, or distributor? Knowing what your business model is will help you to understand what you're supposed to keep track of and how you can remit that information correctly to Revenue Canada. One of the things to do is, if you are working with a distributorship and you have documents, they'll show you how much taxes you've charged. They'll show you how much tax you paid on your inventory. So some forms are very straightforward and easy. In other cases, you have to figure out that information yourself. So know what taxes you are to charge, what the rate is, what items in your goods and services would qualify to be taxed, and then manage those sales receipts and expenses appropriately. If you visit the Revenue Canada website, there's a lot of helpful information there. There are brochures you can download, there are white papers, there are forms, so that you understand your business model and understand what is allowed in your business and how you can prepare. What's the difference between all of these different types of businesses? A sole proprietorship means you are the only owner. There's one owner. A partnership means that there are two equal partners who own and run the business and share in all business responsibilities. It's a good idea to have a partnership agreement or a contract between the two partners, because you may have one partner that has strengths in one area, another has strengths in another. You may apportion the business in terms of who's doing what. Your contract will clearly spell out the responsibilities, and it's a good idea to protect both of you financially. A limited company has a business with limited liability, which can carry some risks into itself. So be careful going into a limited company that you understand the risks. If you have a corporation, if you have incorporated, there are different rules that apply than to a sole proprietorship. So all the revenues go back into the business, and a separate tax return must be filed. So if income is earned, it has to go back into the business. You can give yourself a salary, you can pay yourself a dividend, but you're going to be having more formal documents. Like you're going to have meeting minutes, and you're going to have board meetings, and you may have to have shares. It's more complicated than a sole proprietorship or a partnership. If you're a professional and you're a lawyer or a medical professional in the community, you may have some different rules that apply to you as well. And so understanding your profession and what's required to report and to receive under Revenue Canada laws is very important. If you're a franchisee, agent, distributor, or direct salesperson, you may be remitting taxes back in a slightly different way, and you may have an appropriate paperwork from your distributor to guide you through that process. And as Karen had mentioned in an earlier webinar that we had, any of those multi-level marketing organizations, or if you're an agent, will have some clear guidelines to help you through tax time, to make sure that what they have sold you, you have received in your inventory. The taxes were charged on their side, you've paid those taxes, that you will have in turn charged your customers taxes that you will have collected. So there's a nice smooth flow when you have a corporation providing you with the documentation. Everything ties nicely together if you do the paperwork. If you're doing it on your own, you need to build that paperwork so that your invoices, your sales receipts, your sales journals, your registers, your inventory, your vendor invoices all link to one another nice and cleanly. And understanding the type of business you have could help you to understand that very well. Tax deductions. Quite often people think that all the deductions are allowed in any business, and that's not necessarily the case. It's worth visiting the Canada Revenue Agency website, or even meeting with a small business expert or a tax accountant to really understand. We talked earlier about having presentations in your home. The rules about having a home-based business are fairly strict, so understand them thoroughly before you start looking at deducting costs for your home. If you meet the guidelines of Revenue Canada and you have an apportioned space that meets the directives, then you would likely be able to consider home expenses. If you don't, they may disallow those. So understand what the rules are for use of home for your business, and understand the type of business you have so you can use the appropriate deductions to help to reduce the amount of tax you're going to be paying. But the reality of it is that there are deductions, but the deductions have to be fair and have to be understood as against your revenue generated and income taxes received. Are all business expenses deductible? Not necessarily. And this is where meeting with an expert will help you. Knowing what expenses are allowed will save misunderstanding and extra costs later on. So if you have taken deductions that you are not allowed and they are rejected, you may end up paying more tax at the end. And you want to make sure that when you do your business tax returns, you have a good understanding of all the aspects of it. And if you've kept your documentation nice and clean and you've identified everything, and you've recorded information for things like your gas usage, your mileage, your meals, your business purchases, any travel you have, and they link back to your sales activities and you're building the business. If you're well documented and you have understood your business type and you've taken the proper deductions, in the event that you are audited or deductions are disallowed for any reason, you have good supporting documentation to go to Revenue Canada and ask them to take a look at it once more. So being prepared is the most important thing to know. What are some of the samples that you might be looking at in terms of possible deductions? Gas mileage, vehicle maintenance. If your car is being used predominantly for business or even a portion of it, keep good records. You want to be able to link your gas mileage and vehicle maintenance into specific activities such as travel, promotions, customer presentations, and meetings. Did you travel for training? Did you take any training? Keep all your training receipts. Did you spend money on a fax machine, internet for your office space, a cell phone, desk phone? Those are communications to help you to build your business. With meals, make sure they're linked to only specific things in your appointment book. So if you're meeting with a vendor, supplier, services provider, if you're meeting with your accountant, you're meeting with a potential client, link your meals back to your appointments. And make sure you understand the rules about those. If you've had professional services for website development, marketing, legal, accounting, advertising, those come under professional services. If you have incurred advertising costs, that's advertising. So we're looking at consulting here under professional services. If you have rented office space or you have home office expenses, those are some of the deductions that can be considered in your annual tax return because you would have paid taxes on many of the costs in these areas. So keeping track of your receipts, my favorite topic. From the date you start your business, and we talked about this in a previous webinar, keep a booklet, keep a small portable office, keep a brochure type holder, and then make tabs, put everything in there. You need to keep your business registration, your legal documents, all receipts for purchases and expenses fully annotated, all allowable costs and expenses, all salaries you might have paid, because you would have had to pay other things for your staff as well. They wouldn't just be receiving a salary. You would have to have taxes, possibly CPP. There might be other things as well. Keep really good records. Keep your home expenses or your rental expenses if you're in a business building. Keep all your office expenses, and if you have a professional service where you're going to be using supplies, let's just say that you have a massage therapy or a chiropractic office, all the supplies used to care for your patients are professional supplies. They come under clinic supplies, but those are also to be considered as business expenses building your business. Inventory, what did you purchase to sell to your clients or to use to support your clients? And what are the total taxes charged and paid for each category? That's very important. So you need to keep all your receipts and then you need to categorize them and total them. So you have a very good idea, and every receipt must match the listing on your spreadsheet or in your software package, so that if you were ever audited, every receipt matches every entry on your spreadsheet or in your computer. They're all nice and clean. And then a receipt can be tracked, linked to your appointment book, matched to your mileage, linked to all of your activities, and then you can say, well, you know, I incurred this expense to support this client and paid this much tax on the meal or this much tax on the gas, whatever it might be. And so that forms part of your activities to build your business and to develop your sales. Why is it important to have all this documentation well taken care of? Well, because you're accountable each year to record all of your business income. And income is the difference between expense and revenue. So it's very important to know what all your expenses are and your income sources. So for instance, if you have a goods and services business and then you buy something and you sell it to someone and they return it to you, you're going to have a receipt of inventory coming in from your service provider. You're going to be selling that to a client. Then you have to make a return. So that gets a little complicated when you have more steps going back and forth. But if you have good records, it'll be fairly easy to manage any of these transactions. It's important to keep all of your business receipts with your tax return for each year. Make sure you have your assessment from the Canada Revenue Agency with your tax return. Keep all your receipts together. And if you are ever subjected to an audit, or you want to sell your business, or you want to get financing, you can take those tax returns with all the information in it and share sales revenue, share marketing costs, share information. How is your business doing? And the annual tax return really is a good snapshot of how well your business is doing and what your costs and sales are in an overall view. It also helps you to build your business as year over year you can see growth and development. You can see increased costs or reduced costs, increased revenue, reduced revenue. They become a permanent record of your business activities, and once you become incorporated, those become part of an annual report. So be sure to keep all your tax returns with the previous history so that you can help to protect your business. Part of the value of managing your receipts is that if you're tracking them through the year and you're evaluating them, you can see how much you're spending. If you had a budget for advertising and you overspent it, you can curtail that or maybe reassess it. If your sales are not as high as they should be, maybe you can change some of the programs that you're working on. If you're noticing a frequency, volume, or cycle change with your sales, you can start to evaluate them. So writing down all of your expenses is really not just for tax time. It's to help you to build your business and help you to achieve your vision of growth. One of the key things is to determine if your expenses are exceeding your sales. And if your sales are less than your expenses, you're either very new and growing your business, or you may be spending too much in expenses and you need to make more sales to cover those. Knowing what all of your costs are will help you to make a more effective budget and help you to plan your marketing growth in the future. So how much money are you spending on purchases, on inventory, on marketing, on advertising, on development, on travel? Can some things be curtailed to help to pour back into sales and help you to make more revenue? So there's some really good reasons to keep track of all your documentation, and that is to help your business to grow by being aware of everything you're spending. Income, people generally think of as all the money that's coming in through the door, but it's more than sales. Calculating income when you're preparing your taxes takes into account the difference between sales and the purchases of product, training materials, allowable expenses to make sales and run your business, returns and exchanges, any other sources of business income, which might include training and professional service, and other business costs. Income is the money you earned after paying all the costs of being in business. Net income before taxes reflects the health of your business. That's why keeping those tax returns is a really good snapshot of how you've done for the past 12 months. So in conclusion, I would really just encourage you to take the time to look at your business, understand your business type, identify what to report on your return, make sure you have all of your business receipts in order, make sure that you have tracked all your allowable expenses, remove receipts that you can't read or are not appropriate or don't match what your expenses are. Make sure they're nice and clean and legible and well annotated. Complete your tax return on time and retain your tax business records. So that year after year, as you grow, you have a great set of records year after year to help you to expand your business, to be prepared to sell your business, to be able to go through an audit, to correctly record your revenue and taxes payable. It doesn't take a lot of time to do this. If you do it right in the beginning, keep following through year after year. And if there's any changes that Revenue Canada lets you know about on your assessment, meet with your tax expert, determine what needs to be adjusted, and then you're ready for the next year.
Thank you, Renee. There's some great reminders in here about tax time, and perfect timing too, since tax time is right around the corner for us. So in our next presentation, we will be discussing receipts. So stay tuned and join us again, where we will be talking about receipts and tracking those and keeping good records.